if you go to them and say like, what is a perp? They'll think you're like selling them a drug or something.
What made you stick with Hyperliquid so early on?
I guess you could say I'm like the ideal retail customer, because like the way I look at leverage is, you know, if you're offering like 50x leverage, why are you going to use 49? Like just slide the bar all the way up. And we hit $1 billion in deposits in the first 3 weeks. And the first 6 weeks, we hit $2.5 billion in deposits. Then we became the fastest growing liquid staking protocol ever.
The whole crypto space has been in this bear market. Sentiment is basically rock bottom. What makes Hyperliquid so special?
Hyperliquid is going to be the holy grail of what centralized exchanges wish they can accomplish. Darwinism at its finest. Hyperliquid is very much a middle finger to the existing structure, and this is what people have been able to rally behind in a very raw and passionate way. Hyperliquid should be valued at trillions.
Welcome back to Uncut Gems. It's our podcast where we share relevant emerging projects. Unfortunately, there are not too many gems out there. Therefore, we didn't have a lot of episodes lately. But today, that's even a more reason to be excited, because we have the pleasure to host Omnia, who is a co-founder of Kinetiq, a project that spans multiple verticals across staking, hip free markets that are all over the place right now, and different DeFi strategies. And Kinetiq is deeply woven into the Hyperliquid ecosystem. And yeah, especially given the traction of Hyperliquid, we are super keen to dive into Kinetiq and the Hyperliquid sphere today with you. So therefore, welcome to Uncut Gems, Omnia. It's great to have you here.
Thanks for having me, guys. Appreciate it.
Sure. Let's start very high level. As far as I understood, you were quite early alongside your co-founders being involved in Hyperliquid. We are keen to get your story. What clicked early? What made you stick with Hyperliquid so early on?
Yeah, it's interesting question. It's a few years ago now. So maybe to properly set the stage, give a little bit of color as to what we were doing before and how it kind of all ended up making sense. So my co-founder and I, well, now, you know, Kinetiq has 3 co-founders. So it's myself, Magnus, and Justin, who are the 3 co-founders. And we've worked together on several projects over the last few years. But one of the last things that we were doing was NFT market making. I guess you could say we were the only ones dumb enough to try our hand at that, but we did it very well, and we would consider very successfully. And so at this point in time, early 2023, had been interested by that point already in using several perp dexes. I had worked previously at a boutique hedge fund that was mostly on the liquid side, helped them start their venture side after, wrote the first few checks, and then left to start building in DeFi. And that was obviously an interesting shift, going from the investor side of the conversation to the builder side. So I felt like there's edge in that. So anyway, at that point, early 2023, Magnus and I at the time were listening to a variety of different quant podcasts and just like peering into the brains of like people who do this in traditional finance and just in general, like thinking of ways to approach high frequency trading in a very illiquid asset. Ultimately ended up coming across a podcast called Flirting with Models. And this happened to be Jeff's first podcast on Hyperliquid, to my understanding. I don't think he's ever talked about it before that. It happened to be super interesting. And by that time, like the interesting part was not the perpetuals DEX, because by that point we had already used many of them, from GMX to Perpetual Protocol and many others. So we weren't excited about just a new perpetual DEX, but the really exciting part was Jeff talking about the fact that Hyperliquid was a blockchain. And at that time, it was using some form, I believe, of Cosmos. And it was, so this was prior to HyperBFT. So I believe the highest TPS was 20,000 at the time, which was still obviously really great to hear and whatnot. But still, the point being that found it super exciting that it was being built on its own chain. So at that point, what do you do naturally? Go into the Discord and start playing around. And I remember vividly after that podcast thinking to myself, like, is it worth the mental energy right now? I'm joining another Discord. I mean, it was a very boring time in the market, as you can imagine, 2023, Q2. So yeah, not super far off of the whole FTX slash Luna problems, right?
Yeah.
So I think there were bigger macro crypto problems at that time. So anyway, it was just not an interesting time at all to be doing things like this. But nonetheless, ended up joining the Hyperliquid Discord. At that time, it was closed alpha, and you needed a code to trade on Hyperliquid. So I remember, and it was very, I guess you could say, coincidental, because I had never been the type, at least for quite some time since leaving the fund, that like to go and ask for codes and shit. So
Yeah.
I remember asking for a code, and funny enough, I still talk to the person who gave me the code today. It was Rect Gang, actually, that community, if you guys are familiar with them, but they come from the Cosmos Eco. So yeah, anyway, start trading on it, and it was a really fantastic experience at the time as well. Obviously early, but still, the point being that it was fun, and it was. I mean, so it's very funny. Magnus and I have two very different styles when it comes to perp trading, and even Justin, he'll take stabs. Sometimes it's kind of like the middle ground between the two of us. So the way I look at perp trading myself, and why I guess you could say I'm like the ideal retail customer, is because like the way I look at leverage is, if you're offering like 50x leverage, why are you going to use 49? Like, just slide the bar all the way up. And I have a difficult time kind of thinking as to why, like thinking about why use any less, right? Like, you're getting the most capital efficiency, less risk return, etc. And then
Yeah.
Magnus, on the other hand, is the type to be like, if there's like 50x leverage, be like, let's go 3 to 5x, and just be low and slow. And obviously he has yielded very different returns, right? He was the type also to like basically just deposit into HLP and chill. And I was like, all right, I'm just going to slam leverage. So anyway, we got to test Hyperliquid in very, very different ways. And this is how this started ultimately. But anyway, going forward, we kept doing our thing. And towards the end of 2023, obviously Hyperliquid introduces these points in October. People get excited, but it wasn't anything super wild until kind of like early 2024. Fast forwarding to that point, April 2024 comes around, and Hyperliquid announces HyperBFT and HyperEVM. So this was the turning point. This was really like, okay, now, wow, 2 years ago. So this was the big turning point. We're like, okay, this is where I mentally went from Hyperliquid is a perpetuals exchange to Hyperliquid is going to be the holy grail of what centralized exchanges wish they can accomplish. And I've been talking about this for a long time, where effectively centralized exchanges have implemented this, jurisdictionally restricted model that also just happens to be something that is extremely extractive, where they'll basically go and develop their own L2 that is, has another name, and in most cases has another token, right? So yeah, Hyperliquid flips this model on its head entirely, and kind of unifies, if you will, the state between Hypercore, the trading environment that's ultra performant, and then the HyperVM, which is optimized for smart contract deployments. So as I'm thinking about this, Per comes out at the time, etc. By the end of the summer, obviously this is far from confirmation of the Hype token, which I think came in October, if I remember correctly. But by the end of summer, we're like, okay, we're gonna do something, right? And we went through every single category on DeFi Llama. And we're like, what could be exciting for Hyperliquid? Is it another lending protocol? No. Is it another AMM? No, et cetera, et cetera. And we're like, well, if this thing's going to have a token, which we think it is, we should build a liquid staking protocol. And we had all had experience building rather large liquid staking protocols before, or being a part of it in some way, whether it's on the BD or the technical front. So we understood very well the building blocks for what would make us a very successful liquid staking protocol. So anyway, this is effectively what materialized very quickly. Projects go through these different like naming cycles, and we very quickly settled on the name Kinetiq, and instead of the C at the end, Q, as an ode to Hyperliquid. So Kinetiq was born. It was initially 7 of us. It's now 18. So mostly engineers, but yeah. So we formed up in at the end of summer 2024. By the end of the year, after building out effectively the MVP, if you will, and purchasing the ticker with our own money, and both tickers, K-Hype and KNTQ, which was purchased long before Kinetiq went live, funny enough. That's how you know we were very obsessed with the ticker auction system of Hyperliquid. We raised a very, very small amount of money for a liquid staking protocol. Actually, for the size of Kinetiq today, even at the time of launch, it's the smallest a liquid staking protocol has ever raised relative to its size. So we raised $1 million in a pre-seed, and a strategic round after was $750,000. So it puts our total funding at 1.75 million. And yeah, interestingly enough, HyperEVM would go on to launch 2 or 3 months after that funding round. And we spent the next 5 months so this is February 2025. I know I'm taking you guys on a crazy journey. But
fair.
yeah, so February 2025, HyperEVM goes live, and we are sitting around banging our heads against the wall as we start further auditing the protocol. So it's ready by this point, but we needed one specific thing to go live, which, like I said, is kind of what makes Hyperliquid the holy grail of what centralized exchanges always wanted to achieve, and just kind of settled on this very extractive way to go about that. So what the hell is that? It was one precompile called the write precompile, or now known as core writer. And effectively what this does is allows you from the EVM side of the fence, if you will, to basically write to the hypercore, which is like the trading environment or where staking is done. So what needed to happen, for those that aren't aware technically, is you have this big staking contract, like the LST, right? And instead of us, the easy way would have basically been, okay, we have people deposit into this contract, and then we have like some sort of manual or even automated wallet or a bot or something. This is what previous liquid staking solutions for Hype basically did. They would manually go in and then like move the stake over and then stake it, claim the rewards, move it back over, etc. So that's like the easy way, and that was like option one. But what we wanted to do is basically leverage all of Hyperliquid's technology to build the first fully on-chain liquid staking protocol for Hype. And Core Writer allowed us to do this, where the contract itself would basically handle all of that logic instead of having this trusted bot effectively handle all of that logic. So 5 months later, when Hyperliquid released Core Writer, we were ready for months at that point, had been audited 4 times by the best in the industry, Zenith, Spearbit, etc. We launched with a very large bug bounty as well. So yeah, by that point we launched, and we became the fastest growing liquid staking protocol ever on an ecosystem that wasn't essentially made for DeFi. So that was super crazy to see. I mean, we hit $1 billion in deposits in the first 3 weeks. In the first 6 weeks, we hit $2.5 billion in deposits. So yeah, ultimately it was a very humbling experience. And how we were able to do this, I mean, we proudly say, like, there's been no paid TVL deals at all. And we kind of took the Hyperliquid approach, if you will, by not directly going out and privately incentivizing people to deposit. It was years of relationships that were built up on Hyperliquid from trading circles, people that were in DeFi that we knew that were coming to Hyperliquid to trade and whatnot. So it was a lot of cross-pollination ultimately that led to this, thankfully, very successful outcome. And even today, post-token, post-incentives, Kinetiq retains 75+% market share. So obviously very, very proud of this, but now Kinetiq has expanded into several verticals. So liquid staking for us was, I can't say purely a public good, but very much along the lines of basically putting Hype to work within the HyperEVM DeFi ecosystem. We believe Kinetiq really is like the central nervous system for HyperEVM and all of Hyperliquid DeFi. So K-Hype dominates TVL on all relevant protocols on Hyperliquid, from money markets to AMMs, yield trading protocols, options protocols. So really everything that you can do on HyperEVM is centered around K-Hype for the most part. So having said this, we took the staking suite and really grew it. From launch, we kicked off with something called Earn, which became the largest vault in all of DeFi. Again, funny enough, across an ecosystem. This is managed by Veda. It was as much as nearly $800 million in deposits at one point, all Hype and K-Hype. And it still exists today with a little bit over $50 million in deposits. Does a bunch of things like leveraged staking strategies, peg arbitrage on the open market. And it delivers a little bit under 50% extra staking yield on top of the existing 2-ish% staking yield. So anyway, I know I'm kind of nerding out over here, but we've done several other things. We've delivered an institutional product that we call iHype, where several public companies stake with us today. Hyperion DeFi, HYLQ strategy, working on several others. Regulated market makers stake with us in this private isolated pool effectively. KM Hype was shipped as well, which powers the Kinetiq Markets HIP3 DEX. So yeah, each of these products in the staking suite effectively has complete and total risk isolation from one another, which was very important in our design. And now, like I said, Kinetiq has expanded into several verticals outside of just staking and really is pushing the envelope with regards to what liquid staking protocol can do. So anyway, it's a very long intro.
No. You don't worry, Omnia. You're free to nerd out here. That's the format that we built, especially for emerging projects to nerd out. Okay, so, and we will also like highlight all of these different angles that you touched on, that you are like building right now in the remainder of this podcast. But it's great to hear your like founding story. I also think like, especially what you described earlier with this different perp trading behavior between your founders. Probably this synergy and different characters also translated quite well in how you run Kinetiq nowadays.
100%.
So
100%.
It's cool to see, and it's always so important that you run a good shop or a good business with founders where you synergize with. And I feel like your story clearly like paints that picture.
Yeah, definitely. Could not agree more.
Yeah, that was an extensive introduction, but it was really interesting to hear, especially from the early days, because I mean, just speaking for myself, I joined Hyperliquid a little later, even like after the airdrop. I didn't participate early enough, but then jumped on the bandwagon beginning of last year, still early enough. But
early enough. Still early.
Yeah, I mean, if you look at the recent months, the whole like crypto space has been in this bear market environment. Sentiment is basically rock bottom. If you look outside of Hyperliquid, I mean, most crypto projects are down 50% from the highs. We had these DeFi exploits over the last couple weeks, and sentiment is rock bottom. And then there's Hyperliquid on the other side, especially with HIP3, which was shipped in October, that really like started a new wave of excitement in Hyperliquid. I mean, also the news coverage over the last couple of months was really insane. If you ask me, with Bloomberg Terminal, Wall Street Journal, Financial Times, then this nice article on Jeff in Colossus. You touched some points already a little bit, but I would like to hear your opinion on what makes Hyperliquid so special. What makes it stand out? Why is it different than everything else in crypto, in your opinion?
Oh man, if you thought the intro was extensive, prepare yourselves.
Yeah, maybe try in a nutshell.
Yeah.
Break it down first.
So, over the years, I've gotten, I think, quite good at just putting this into a very concrete, small box. So Hyperliquid is special in many ways, as many people know. I mean, obviously, the idea that they've raised practically zero funding, this is huge. It makes the ecosystem pure, if you will. This is not to say that people don't have, obviously, huge vested interest in Hyperliquid's success. What this means is, I mean, it's just forced these people to basically represent this interest through like a market purchase of Hype rather than a private deal, right? Which is obviously important and has led to Hyperliquid's kind of status today. I still believe Hyperliquid today is the best ecosystem to build in and be a part of in crypto today. So what makes Hyperliquid special as a whole, besides the technical components, is it is Darwinism at its finest, I think. You have the most raw, I guess you could say, subset of traders in crypto, maybe outside of the meme coin space, that there is some component of PvP to an extent, but it's grown big enough where it's not super PvP, but it's really where it's the only period or point, if you will, where the market has been able to express its opinion on something outside of centralized exchange control or their own black boxes. So you're able to see these things happening in real time and now price discovery is being reflected, especially with HIP3 now. Price discovery for macro movements and things outside of the crypto space that would usually keep crypto in like a very, very low volume environment are now being reflected completely on chain and on Hyperliquid. So Hyperliquid has really started to cement itself into the public consciousness as like the venue by which to look at whatever's happening around the world. So obviously this is going to become even more exacerbated with the rollout of HIP4 with the outcomes, which is going to be great. But this is like the most, I guess you could say, nutshell way to talk about like why Hyperliquid has become so special today and why it's such a thorn in the side for maybe existing ecosystems or others that have not been able to paint such a pure picture of itself. And I mean, the reality is you have thousands of super active traders that basically come together and, compete against each other in the books. Yeah, sure. But there is a component of it too, just to call it what it is. It's like we are a very loud subset of people in the crypto space. .HLs have a notoriety to them where, it's just this notion of calling out bullshit where it is and like challenging status quo, right? So I feel like that's the most simple way of explaining, how Hyperliquid has effectively caught lightning in a bottle here, because it's not purely just the volumes, which alone are amazing, or the OI, which alone is amazing, or the percentage of centralized exchange market share, which is awesome. But it's kind of like what people on Solana did to people on Ethereum, and like how Solana just kind of went to this ridiculous state because of its ability to basically just like put Ethereum people in a box in public and say like, hey, we're gonna bring capital markets on chain, and people can express their opinion on Solana in a way they can't on Ethereum because it's free of this intellectual debt, if you will, right? Where you're not considered high status or whatever if you're not like writing the next white paper or something. So I think in this way, Hyperliquid is very much a middle finger to the existing structure, and this is what people have been able to rally behind in a very raw and passionate way. I mean, I've had my own passionate public statements about other things, Binance and the like. But anyway, the point is that this is what I feel like has really made Hyperliquid what it is today. Again, in a nutshell, right? Outside of all the other micro things.
I think that's a great, very, very great summary that also resonates with me. One word that sticked out to me was pure. I fully agree with it. It's very pure and raw, especially in how it got traction. Also, what Luca just described earlier, he joined after the airdrop for fundamental reasons and because the product is probably just very sound. Obviously, like you have this a lot of innovations combined with very sound liquidity. And then maybe what other ecosystems are trying to mimic right now, or also layer ones, where you still have a like large L1 premiums, but now we are entering this new notion of, hey, revenue is actually like super important, and we want sound investments, like basically also mimicking kind of the TradFi space with dividends, buybacks, and stuff like that. And what Hyperliquid kind of does, the ecosystem just says kind of like, screw the Fed application theory, screw the Fed protocol theory. We just do kind of the Fed ecosystem, kind of, because we combine this revenue layer with a sound, let's say, infrastructure and blockchain, plus sound community and so forth. It's really interesting, and I'm keen to see if others also launching your own ecosystem native stablecoin. Really smart. So I don't know, it just ticks all boxes, and it's now becoming this like major ecosystem where it's kind of very tricky, or for me a big question mark if it ever loses its momentum again. So I feel like I resonate very much with your summary. Great, very well done in a nutshell, to be honest.
Yeah, I have to agree with what you mentioned, right? Like the space has, obviously this is just natural with more institutional participants coming more and more to the on-chain world. it is extremely hard to ignore something like Hyperliquid in traditional finance, right? Something that's taking practically the entirety of its revenue, that's not going to finance some development team or something like that, or can be siphoned somewhere else for something else, and just literally going back into purchasing the token unapologetically and completely programmatically is extremely difficult to ignore, no matter what sector of finance you're in. Any argument after that is completely subjective and makes sense, right? To whoever it is that's like stating that. But the reality is you cannot ignore that Hyperliquid taking 99% of its revenue, 1% still goes to HLP yield, but taking 99% of its revenue and driving that to hype token buybacks is, again, something never really seen before. Yes, people have done buybacks before, done burns, etc. But yeah, I mean, Hyperliquid is a phenom, right? And again, it matters particularly because it is so large in its entirety. I mean, Hyperliquid, I don't think many people remember this, but so when Hype TGE'd, there was this really crazy thing that had happened, and obviously there was no mention of the assistance fund before TGE, but I remember vividly, like in a ton of group chats, people were like, what the hell is happening? Right? Like, yes, like Hype TGE and people were excited, whatever. But we had identified this wallet that was like 0x FE. And we're like, who the fuck is this? Like, it has $75 million in it, and it's just relentlessly buying this thing. It's like, so what is, so anyway, at some point after TGE was announced that this is the Hyperliquid Assistance Fund, et cetera, I'm not sure how long this went on for, maybe less than a day, maybe a few hours, I don't know. But I remember the feeling everyone had, like, what is this? And like discovering the assistance fund, and that kind of further exacerbated how wild this was. And it was like lightning hitting someone's skull, right? Like nobody had thought that this is something that was possible. But anyway, again, that's why I make the connection, right, between all this traditional financial interest to Hyperliquid comes from the fact that it is the first token, I guess you could say fairly, that has actually been treated like, I don't know, can you say it's like the first thing that's been treated like there is no private business accruing any value, et cetera, et cetera. And it's all just going to the token. Traditional finance has obviously become super interesting because it's just a huge amount of capital, right? Like nearly $1 billion has basically been used to purchase Hype from the open market. I forget the average price these days. But the point being that it's just a sheer, huge amount of money. So it's hard for TradFi to ignore. And now with these DATs going out and kind of explaining this, it's obviously been exacerbated. So obviously very good things. It's people make this meme obviously of like the Ethereum Foundation just like relentlessly selling ETH every so often. And I think it is funny. I mean, it's just business at the end of the day, right? Like you need money to operate, right? And the Ethereum Foundation sitting on a ton of money. Sorry, excuse me. It only makes sense for them, right? But it is funny when you compare Ethereum as a multi-$100 billion asset and something like Hype. At some point, they either have to converge or completely decouple to Hype's upside, in my opinion. But yeah, that is, that's basically what the extreme long-term thesis is. Like as these companies or organizations continue to basically use their own token to finance developments that may or may not be important in the grand scheme of things, do you turn to like a raw and, like you said, pure business that's just like a pure, cash cow? And like, let's talk about Polymarket and Kalshi introducing perps. This is only going to make Hyperliquid even more efficient because you have these other venues that are introducing and thankfully normalizing perps in the US sector, if you will, or even globally. And it's kind of why, perp proliferation in general had made Hyperliquid a very big venue in the first place. It's like if Hyperliquid were an options protocol, it would probably be nowhere near what it is today. And I don't mean probably, I should actually say more accurately, there's no way in hell it would actually be anywhere near what it is today because options are just not really cared for on chain today.
Yeah.
But perpetual futures,
Yeah, not yet. Yeah.
Yeah, not yet. Exactly. I should say yet. Yeah. But it's like option protocols for the most part have like been super cursed until kind of, I would say
crazy.
recently. I mean, Risk has been having a great year. Risk coming to Hyperliquid was fucking awesome. I remember putting out a tweet. I was like, who's going to do options on Hyperliquid or something like that? Who's building this? And then Dan from Risk was just like, what's up? And becomes Hyperliquid. And now they have like a ton of TVL, and it's like 70 to 80 million in deposits. And the majority of it, like the largest asset outside of stablecoins there is K-Hype. And so it's been really interesting to see Hyperliquid as an ecosystem further kind of be the wedge, if you will, that brings on these more traditional instruments that people are now more comfortable trading on chain or more interested to trade on chain instead of their interactive broker accounts or Robinhood accounts. I mean, it's been more than just proliferation of perpetuals, in my opinion.
Yeah.
So yeah, man. I mean, shit. So
I mean,
yeah, that's my take.
Hyperliquid is still kind of like rapidly expanding into different verticals right now. Unfortunately,
Yep.
or not unfortunately, one of our calls, we have this annual publication, The Outlook, where we go out and make some predictions for the upcoming year. And one of them was that 26, according to our analysis, should be a year where options at least get relative traction compared to perps and other markets. I mean, we still have 8 months left. Let's see. Because
And HIP4 is around the corner.
Exactly.
because
Probably.
if you compare to traditional markets, like options markets are the biggest venue, right?
Yeah.
So
Yep.
let's see. And I fully agree. I was like observing like so many options protocols already that really tried, that also gamified options in a very cool way, in a very sexy way, but they failed to get any traction. And maybe having the
Yep.
support from such a strong ecosystem such as Hyperliquid maybe makes them click. Let's see.
There is a strong presence of financially savvy people on Hyperliquid, and I know that's going to sound really stupid, so let me clarify. So
Luca,
There-
you as well.
Yeah,
Joke.
I'm a degen.
yeah, I'm the same. I mean, like, I'm not going to be the guy that writes you like an options plan. But so what I mean by that is, if you were to take any other ecosystem and like properly divvy up the financial literacy in terms of ability to trade these instruments properly, you will find that Hyperliquid has the highest concentration of these people. I don't have a source for this. It's just years of being in the ecosystem, talking, seeing people execute trades, seeing what people care about, right? Because I listen to the community on a daily basis, and by this I mean community is like, even if it's not Kinetiq related, I just see what people complain about or want or don't want or whatever, right? So there is that very, very strong, like on Solana, this is not talked about a lot, right? Like Solana DeFi is just not really a thing at all. Solana meme coin, sure, okay. Depin, if you want to go off that cliff, sure. Even on Ethereum, I mean, sure, you have like some institutions there, but it's more so because of the lindiness or security of Ethereum that makes them feel comfortable and stuff. But in terms of financial literacy or ability to come in and execute these trades and financial sophistication, Hyperliquid, in my unprovable opinion, does have the highest concentration of these types.
Interesting.
And yeah, what I mean by this is obviously you have enough flow from a sophisticated enough crypto trader, and by sophisticated I mean you're looking at a screen and you see margin bar, slide it all the way to the right, and you see leverage bar and you slide that all the way to the right. Like that's just what I mean by sophisticated, as in like they know how to put on a trade on Hyperliquid, and this flow means enough to certain prop or certain like side desks of institutions who will give their crypto teams mandates to trade, where they will come on and put on sophisticated trades, right? Through perpetuals, using spot as well, and eventually now on Hyperliquid options or outcomes as they call it, but people can build options on HIP4. So yeah, it's very interesting. The distance between retail and institutional on Hyperliquid is very small, very, very small. And I don't just mean in the order books. I mean, if somebody today comes to Hyperliquid and says, I want to build a product that does ABC, XYZ, and this could be a builder code application or it could be some super sophisticated options protocol, it's very easy to get in touch with institutions on Hyperliquid who would be willing to either give feedback or literally trade it if you build a good enough product. So that is one of the most exciting parts about Hyperliquid, and the way I look at it as a builder and like thinking about it from the builder category, that is I guess one part of the big incentive in building on Hyperliquid is that the distance between these types of people is very, very small. So you have community that will obviously support as well, like out of the box, which is great, and they will ruthlessly beat down your product, which is amazing. Especially if you're a fan of early feedback. But yeah, I mean, that's kind of the beauty in it. It's small enough where you have a bunch of people who actually care about seeing you build something cool, and they'll tell you if it's shit or not, which is really good. Instead of like, oh my God, you've released this incredible white paper with a shit ton of math and it looks amazing, but nobody's ever going to come use it. I'll give you an example. Hip3, people have asked all the time for certain listings, okay? And they make it sound so like, oh, this would be super traded, or I'll trade it a lot. And like for example, I'll give you an experience of ours. Like we listed the first ever American defense stonk completely on chain in the form of RTX, right? Which is Raytheon rebranded. And while you would expect there would be a lot of volumes, it may be a couple people that are super interested in trading something like that, because you may think with like all the geopolitical tensions that something like a defense stock would do really, really well, or trade a lot. They don't really trade even that much in TradFi, but you would think some people would kind of use it as a proxy in crypto. And again, on Hyperliquid, this is my point. You can literally just test things in the form of a listing and see if it's going to do really well or not. And this is the perspective of a Hyper3 deployer. I'm not sure if this has even been mentioned publicly before, but this is again one of the advantages of Hyperliquid. You can come in and test something as sophisticated or as expensive as listing a ticker through Hyp3, and very quickly realize and get real-time market feedback as to what people would want to trade or not. And this is only possible on Hyperliquid. On other ecosystems, people would probably raise for a year, plan for another year. Again, I'm exaggerating here.
Yeah.
And then go to market before they get that real-time feedback. And you've already, like, the narrative has already changed completely. Whereas on Hyperliquid, if something's happening, I mean, it's wild. On Hyperliquid, if something's happening, we list it or can basically get real-time feedback. I'll put out a tweet and ask people, like, what would be exciting for you, or like, who's going to build something like this? Like, I put another tweet out after the options one sometime last year, and I said, who's going to build leverage tokens? And then Bounce Tech comes and builds leverage tokens. So yeah, are people using it today? Maybe not a bunch, but it's still a primitive on Hyperliquid that people are excited about to an extent and come and build on top. So anyway, that's my take. It's Darwinism at its finest.
Omnia, maybe tell us where is the RVs market? The car market,
That's a good question. We're talking a lot about this. We're talking
I'm missing it.
this. Yeah. That would not be a bad idea. We've been looking at this for sure. And if we list it, obviously you'll be in the know. So yeah,
Very nice.
That's a great idea.
Nice.
I would love to list that if it's
compliance gonna love it, Dominic.
Yeah, the compliance will love that.
Oh, shit, yeah.
So yeah, let's see if we can get that done. It's got to pass the several rings,
Nice. So man, we touched so many points already, and for me, I feel like a lot of people know about Hyperliquid. They know Hyperliquid, they know the hype token, the perp decks, but I feel like a lot of people are still like missing the ecosystem. At least from my point of view, it's probably a lot different in your kind of circle. But
no, you're right. You're definitely correct.
yeah, and I mean, you touched on Kinetiq. You mentioned some points. You started as a liquid staking product, but I mean, looking back over the last 1.5 years, you evolved into something a lot larger than just liquid staking.
Yeah.
And I mean, we will be touching some of your products in a little bit, but maybe if you could explain how this all came to happen. How did you decide to like keep building? I feel like we've only seen like a small part of what is still yet to come. You're just gonna keep building, or like what is your plan?
Yeah, I mean, I say pretty often, liquid staking by itself is extremely fucking boring, and I don't know what the hell I would have done to myself if we just stick with liquid staking. But again, in an ecosystem like Hyperliquid's, it's really impossible to just sit there and be the dominant liquid staking protocol and say, okay, like we're not going to do anything else. So somehow, right, we were able to take the liquid staking suite and then merge it, if you will, with all these different offerings. And so I'll touch on a very interesting part of Hyperliquid. So all of these different developments, like we talked about HIP3 and whatnot, all revolve around staking hype, right?
Yeah, that's true.
Apparently HIP4 is also going to require staked hype, and I believe it's the same amount. So if you're a HIP3 deployer, you will automatically be able to deploy HIP4 markets whenever they're permissionless. So I don't expect them to be permissionless for some time. But again, if you think really, really deeply about this, so it also requires 200,000 staked hype for 3 years that they have to be locked for in order to become a quote asset on Hyperliquid. So stablecoin issuers can come do this. As you can imagine, like I said, everything now revolves for the most part. If you want to take advantage of the Hyperliquid ecosystem and use it to your benefit, you must buy hype and stake it. We realized, as you can imagine, with HIP3 being announced last year before it went live and whatnot, in summer of 2025, so yeah, last year now, we started working on something that we call launch, that we more officially announced yesterday. We call it KIP3 or KIP3, whatever anyone wants to call it. And effectively, Kinetiq is going to support what we call launch, which in short allows anybody to deploy in LST permissionlessly. And why in LST? Like, why would anybody want an LST? Like, I don't think Hyperlend wants an LST or Felix wants an LST. Maybe a validator, I don't know. But that's not really the idea. The idea is anybody can come in and deploy an LST and crowdsource hype from the open market. Whether it's a really large investor, like a VC with a lot of hype that may want to give you some, maybe not the full 500,000, but a little bit. Or the broader public who may want to put 50 hype into seeing your exchange come to life. Or 100,000 hype, it doesn't matter. So launch effectively acts as this platform or launchpad, if you will, for people to negate building an LST altogether and give them a vehicle and the subsequent infrastructure to go out into the public and say, hey, we want to launch our own exchange. Today it costs over $20 million to do, which they're not going to be able to raise. A lot of people have tried this and it's just, that's not happening. You know what I mean? Surprise, surprise. First of all, you're taking dollars and then like basically longing hype with it. It's very odd. So people have been doing a lot of things, right? Like we've seen people trying to do private deals. We've seen people trying to do lending of hype at like ridiculous APR for people to actually take this and become an exchange and see if their earnings outpace that. There's a huge risk to it. There's slashing if you do something wrong or your Oracle fires incorrectly. I mean, there's a lot of risk to doing this. So what we realized is launch effectively is not only the cheapest, but the most aligned option for people who are interested in deploying a HIP3 exchange to come to market, and it basically makes Kinetiq a partner. So we build the infrastructure for you. Like I said, it's permissionless. Anybody can come and use it. And effectively, like I said, you source this stake from the public, which can be a mix of private investors, public investors, etc. And now we're going to be seeing platforms incentivize people to use the launch platform, which takes Kinetiq to a completely different space, right? Because now we become partners to these platforms and enable the community to take several bets on other HIP3 exchanges. Whereas the only other way to kind of do this is by trading on a HIP3 exchange like ours, for example, and hoping that you're incentivized. I mean, today, Kinetiq Markets is the only one that is post-token, number one, and number two actually runs a blatant forward-facing incentive program, essentially. So, yeah, I expect a lot more aspiring HIP3 deployers to come in and basically take a stab at this. It should be very interesting to see if people are willing to stake for other exchanges. But yeah, I mean, this is just an example of how far we're pushing the envelope for staking and why staking as such an important thing on Hyperliquid is now almost like its functionality is extended. I mean, Hyperliquid, I'll tell you this, did not plan for Kinetiq to come and do this. We've only spoken with the Hyperliquid team once about this.
Yeah.
And people may think we actually talk with them very often. Like, I think this is like a weird preconceived notion and a kind of an expected thing in other ecosystems. You're the largest protocol. You talk a lot with the team. We barely speak. We ask them questions every so often. They ask us questions every so often, and that's pretty much it, right? Like everything else is just happening independently. They're working on their things, we're working on our things, and that's pretty much it.
And I mean,
So
that's also a special thing about Hyperliquid. I feel like
yeah, like I said,
decentralized small teams.
Darwinism at its finest.
Yeah.
If you suck, you suck. If you're great, you're great, and like that's it. And it's cutthroat, but it is the best place to be, especially for serious builders. And like I said, the real-time feedback loop is incredible. You can be super experienced building something that was king made in another ecosystem, but if people on Hyperliquid hate it, you are not going to do well. And that's like, again, for me, the most exciting thing. It's a privilege, if you will. It gets me out of bed in the morning, and it gets me thinking about how to further Kinetiq's dominance, how to further market's dominance, and whatnot. And it's put us in a spot where you really have to think outside of the box. There is no like, okay, let's just be the XYZ protocol of Hyperliquid. So in many cases, I mean, this is happening like tens and tens time over in like other ecosystems. People want to be the Lido of blah 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 ecosystem. People want to be the Jito of blah 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 ecosystem, etc. So for us, we want it to be like, who knows? Maybe today, at some point later down the road, people say they want to be the Kinetiq of blah 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 ecosystem. Who knows? But what we know for sure is that taking the staking suite and basically pushing it into kind of extending Hyperliquid's sphere of influence, if you will, is it's a pretty special thing, right? People can come and use a launch product at some point in the future to basically gather stake to become a quote asset on Hyperliquid. It's the same technology can be used for several different purposes. So anyway, that's just again nerding out here, but yeah, the point being that what we're building for is not just the existing user on Hyperliquid today, but the marginal users, the new marginal users that are coming tomorrow.
Yeah, and who knows what is yet to come in terms of like developments from the Hyperliquid core team and what else will be enabled in the future. Maybe we jump to the markets right away here. You mentioned Markets by Kinetiq. It's essentially your own perp DEX. You launched it in January this year.
January 12th.
January, yeah. And I mean, it's now been live almost 4 months.
That's it. Yep.
How satisfied are you with the progress looking back?
I'm very satisfied with what we've done, yes, but there's a lot to do, right? There's more to do than what's been done. So satisfied in the extent that it's live, okay, maybe, but like it's very, very far from where we see markets becoming today. So the reality is like, I don't know, I may approach this in like a very mentally weird way, but the way I look at it is every single day is like go live day in many, many ways. And if you look at the market's XYZ strategy, it's extremely different to other deployers. And I'll explain very briefly how. So obviously the main differentiator is that markets uses USDH, right? Which is the Hyperliquid native stablecoin. It is also imperative to touch on the fact that Kinetiq has been the primary growth driver of USDH. KNTQ TGE at the end of November last year created between 30 and 40 million USDH alone. Markets.xyz has created between 10 and 15 million more USDH at roughly 100 million market cap. I mean, that puts us at well over half of its growth. So it goes to show that we are leveraging the Hyperliquid native, if you will, products. Yes, for better or worse. We know people have had friction moving over from 6 billion USDC that sits on Hyperliquid to, like I said, less than 100 million USDH that exists today in total, right? So there's a huge discrepancy there, and obviously it would be a very big and long kind of battle to kind of move over a lot of that USDC. So there is friction for sure. But the point being that we've introduced on our front ends ways to abstract this. And like I said, this is the most important part of markets at XYZ. There is no deployer today that owns the entirety of the stack. You're either a deployer or the other side of the fence where you're like a builder code front-end application effectively. And there's a very different relationship between the two. So deployers, if you're using growth mode, you'll make 1/10 of a basis point in revenue. So it's very, very small in terms of the revenue for just operating the DEX. And front ends can charge practically whatever they want, but Hyperliquid limits you to charging 10 basis points on notional volume and up to 100 basis points on spot. So front ends are usually charging in the neighborhood of a couple basis points as a fee on top. So they're already out earning the base deployer fees from a growth mode POV by, double digit X essentially. So like I said, very different relationship. For example, Phantom makes over $2 million a month alone just listing HIP3 markets already, like USDC denominated HIP3 markets by Trade XYZ, right? So this is a great example of a fantastic deployer that's come and listed really good markets, and Phantom who's listed said markets and is now generating a crazy amount, even more than the deployer themselves, off of just surfacing them. But like I said, there's never been a situation where the deployer is everything, right? Or we operate like one entity is basically operating all those things. So owning the actual underlying exchange, which Markets.xyz does, having the front end. So we have Markets.xyz, the trading terminal, and we're going live with our mobile app next week on the App Store. So that's going to be fun. So there's that, and then the distribution subsequently. So owning the entire stack is, again, outside of Hyperliquid itself, which is kind of the engine behind everything, this is the most important thing. And you guys may notice this in our media. Listeners or users of Kinetiq and Markets products may notice in our media that we just do things very differently, right? We are almost like the social engine, if you will, of Hyperliquid as well, and take a lot of pride in the media that we put out. So yeah, that's the idea. Obviously owning the underlying DEX itself too, and operating that, as well as having the front end distribution, not just within Hyperliquid, which, to be completely honest, is not really even the target market. The target market is really the people that do not understand, what a perpetual future is, whether that's in crypto or outside of it. So yeah, it's like I said, it's a privilege for sure to kind of be under this pressure, if you will, and the deployer battle may look like what it looks like today, but the reality is that the war is not won at the deployer level. It is won on a very, very different level.
Sorry, I was muted.
Yeah,
How do
no
you?
worries.
I think the HIP3 market dynamics are super exciting. What I discussed earlier with Luca is like one interesting dynamic is that the notional volume in the last couple of months did not really grow, which is kind of expected because we are in a bear market and usually trading activity is more muted and more moderate than like in peak hype cycles. Okay. At the same time,
Yeah.
obviously, like traditional markets are substantially eating into crypto volumes right now. I think peak trading activity across TradFi markets on Hyperliquid was like almost 50%. Where crypto volumes, if you know that the notional volume did not increase, basically crypto volumes lost 50% in market share, which is crazy. So
Yep.
in terms of competitive landscape, I'm wondering, like, could you disclose with us, like your strategy in how you want to kind of maybe compete with that stickiness? I know it's early days still, but Trade XYZ is very dominant across volumes and open interest and so
100%.
forth. Like, what's the strategy to basically maybe eat into their market share?
Yeah, like I said, the deployer battle is just that. It's a battle, right?
Yeah.
But the war is won on a very, very different field, and
Yes.
it's on a very, very different scale. So yeah, I mean they're incredible. Like they've done really, really crazy stuff, and they've brought a ridiculous amount of attention to Hyperliquid. So huge kudos to them and what they've done. But yeah, like I said, the strategy is extremely different, right? We are extremely focused on building differentiated front ends. I'll give you an example of this. USD mode that we launched on our desktop trading terminal basically completely abstracts the collateral type for markets. So if you want to trade a USDC market like XYZ's, go ahead. That's awesome. And then if you want to trade a USDH market like ours on Markets XYZ, that's also possible, all through one kind of mode on the desktop trading terminal. Now, with that said, most of Hyperliquid's volumes come through API, right? Second to that is the Hyperliquid front end itself. And this is where XYZ is most focused, like Trade XYZ that is most focused on the Hyperliquid front end specifically. When they list things, you'll notice they have the Hyperliquid link specifically rather than their own. So this is an example of kind of, Trade XYZ obviously making the most out of having USDC as collateral, which is the native collateral type on Hyperliquid. And like I said, it's fantastic. It's a brilliant strategy. We opted to go down the USDH route, which is, we think, very beneficial for Hype itself, because native markets is taking 50% of their revenues on the yield and driving that into Hype. But, again, it is a very small stable coin at this point.
Yeah.
But how you, like I said, abstract the flow for the net new users or even existing users is, like I said, completely just taking out the swapping equation from that entire process. So nobody, whenever they're using our apps, nobody needs to go from USDC to USDH and vice versa. This is the first step. And on the Markets mobile app, which has been the most fun I've ever had trading perps, probably ever. I swear, I can't wait for people to try it so they can
Not
see.
biased.
It's like, super biased, but at the same time, like, I try to look at this, as you now know, the different profiles within our team of, how we trade perps. I try to look at this from like the dumbest possible perspective, not understanding perpetuals, not understanding a trade execution strategy of any kind, just like doing it like I would on Robinhood back in the day when I was like buying Virgin Galactic options, So, the idea in short is that these people using the mobile app don't even know Hyperliquid is powering the back end, and they will never know. They don't ever need to know. That's the first part. And secondly, they don't need to ever select a collateral type. It's not asking if you want to use USDC or USDH. So, like I said, we're playing a very different game. On the mobile app, we actually list Trade XYZ markets. They're that good, and there's enough volume and OI on them to make sense out of it. So, at this point, like I said, the deployer battle is very different than the broader war of who owns the end user. So I know which side we're gonna be on.
Yeah, very insightful. Like, thanks for sharing. I like the approach, and I was like genuinely surprised when I checked how small USDH still is. I expected it to be like substantially bigger by now, because it's well designed. It resonated like a lot with me.
Fantastic on and off ramp product.
Yeah,
fantastic.
It's crazy. Like, super cool. Also in terms of fees and so forth. Like, it's very. Just yesterday, I saw this like thread on like how some people basically off ramped at zero fees to interactive brokers. It was just very. That's stuff people want. Maybe
there's no reason today USDA should be under $1 billion in market cap.
Agree.
That's a different conversation.
Maybe that can be in the next outlook. Let's spotlight the recent hacks a little bit. Because it was a big thing in DeFi, like one of the paramount DeFi protocols is also suffering right now. Aave, KelpDAO basically hacked in some form of bridge hack, layer 0 involved basically. Like, a big topic right now, raises important questions, also basically primed many outflows across the DeFi industry. I think we had like 40 billion of outflows, 10 billion were basically stemming from Aave alone, so suffering like in a huge fashion right now. Then you have this notion of like Anthropic's new model Mythos basically being capable of finding all of these like 0-day exploits across the DeFi industry, where probably there are many honeypots right now. I'm wondering, like, how does this affect Kinetiq right now? Did you also see some outflows basically catalyzed by the recent developments? And maybe also guide us through your risk frameworks. I also know you have a lot of audits being done I think across 8 entities or something like that. I guess it's important for the audience, for all of our listeners, to understand like how you approach this and how it affects the Hyperliquid ecosystem.
Yeah, no, it's a good fuck. I mean, it's so crazy to see like what's happened, honestly, and it always makes you more and more paranoid, which is good. I'm very proud to say we have a very paranoid team. Like,
that's
first
good,
and foremost. Very, very proud to say super paranoid, never comfortable, and yes, you want that annoying level of paranoia in really anything you do. So audits make us feel okay, sure, but like they don't ever put us at ease. And I mean, quite frankly, how can you ever be at ease these days? But yeah, with that said, something very important to note about Kinetiq is all of the stake is staked natively to Hyperliquid. So from the contractual POV at Kinetiq, it's not that there are no attack vectors. It's just that all of the stake is there on Hypercore, and it's not sitting around in some contract waiting to be attacked. Essentially, um, I may not fully understand the Kelp DAO hack because, quite frankly, I haven't spent a crazy amount of time looking into it. But my understanding is that on Ethereum, it's backed, right? Like completely and fully backed. The problem has been L2s and like exporting this token everywhere where it's not backed, right? So it's not natively staked to say like the Arbitrum network or whatever. It's like staked to all these like L2. It's like deployed on all these L2s that are fractions of Ethereum or extensions of Ethereum, effectively, right? So that's where the problem really stems. And we've explicitly not done this with K-Hype. Like there's been many offers to move K-Hype to other ecosystems like Ethereum, Arbitrum, etc., even Solana. Hell. So yeah, not interesting for us at all. We are the core building block for Hyperliquid itself, and like that's pretty much it. So not to say that the contracts at Kelp DAO or anything are like completely bulletproof, but I think this was mostly a problem of the fact that so much of its TVL was really deployed elsewhere. And this is what we've explicitly, not done effectively. So again, all of the liquidity or all of the hype essentially that's backing K-Hype rests in the Hyperliquid native staking module effectively on Hypercore. You could look at the contracts right now and basically there's like zero hype in it waiting to be claimed. So let's say there was a contractual issue. There's no hype for anybody to take, essentially, right? People, when they unstake, they claim their hype and they walk away, and they do what they do. Now, with that said, our risk framework is extensive and constantly extending, right? So we work with Hypernative for real-time monitoring. Even if there's a large transfer of K-Hype from a protocol outside of ours, we're flagging it to the relevant teams. And like, hey, well, by the way, just know like such and such amount of K-Hype just exited your system. Take a look at this, make sure everything's okay, right? Like it's not even, there's nothing to do with us. Besides we issued the asset. So there's that. We also work with Groom Lake for penetration testing on the team and like more. So yeah, there's a lot, right? Like, so several security teams across the entire stack, and then just auditing the protocol constantly as well, has put us in a very, very good spot from a security POV. Justin, my co-founder and our CTO, I mean, there's literally nobody that I would rather kind of go into this, venture or endeavor with across all of our products, whether it's Kinetiq or markets or really anything like that. So thankfully, his experience across doing many other things in the Web2 world have carried over to Web3, and extensive Web3 experience, has put us in a very, like I said, good spot from a security POV. We tick a lot of, if not all of the boxes that institutions always ask for. And I think this has been rare for a Hyperliquid protocol because, again, the grassroots nature of the community does mean that there is sometimes a little bit of a lower quality with regards to like the early grassroots stages of a project. So from the very beginning, we always had this kind of framework or mental model of we have to act as if institutions are staking with us immediately because, first of all, they were, number one. And number two, we want even more of them to basically refer to Kinetiq as the institutional gateway to Hyperliquid. I'll give you an example of this. K-Hype is integrated on Anchorage, which is this massive qualified custodian. We are the only Hyperliquid integration there. Our native token, KNTQ, is there and available to be custodied, and K-Hype, the liquid staking token, can be custodied there as well. The only other asset that can be custodied there from Hyperliquid is Hype itself, and only on HyperVM. So anyway, I hope this gives an example of like how integrated we are in the overall institutional stack, and from a security POV, why that was imperative to essentially be the case before compliance for any of these institutions could make sense out of supporting us or staking or anything like that. So
yeah, that makes sense, and it turned out quite beneficial then in the end, because like since you are like set up in such a sound like risk averse fashion, it also
Yep.
obviously opens up the gates to the institutional side. And obviously, everybody expects that this institutional side will get stronger and stronger. I mean, ETFs
Yep.
are piling up. Like there's like just recently like amendments around the grayscale, basically
Yep.
application. I guess it's just a matter of time until we see like ETFs, and they might actually be
Absolutely.
maybe compared to Solana and ETH, they might be more bullish than the launches that we saw around like
Yeah.
ETH and Solana. Let's see. I think it's reasonable to expect more bullishness and strong flows, especially if you think about the seller side. There like probably a lot of large holders had the opportunity to OTC to Hyperliquid DATs, so that supply
Mm-hmm.
is kind of off already.
Yeah.
Basically clearing the path for very strong ETF flows. At least that's
Yeah.
what I think is a reasonable expectation. What I wanted
Absolutely.
to touch on with you just briefly is you mentioned Polymarket and Kalshi before. I think a dynamic that is really interesting right now is that kind of Hyperliquid with HIP4 is expanding into kind of Kalshi and Polymarket territory, and now they
Their
do it
domain.
vice versa with expanding into a perp territory. I'm
Yeah.
wondering, and also I checked on Artemis. It's such a great data site for crypto. If you check the flows, the year-to-date flows, Hyperliquid and Polygon were both really strong, while Solana and Ethereum and many other like L1 peers and L2 peers saw very substantial
Mhm.
outflows,
Yeah.
implying that like both Hyperliquid and Polymarket have like achieved this mainstream relevance and achieved this like very good momentum despite being in a bear market, as Luca just outlined earlier. I think
Mhm.
Polymarket has roughly 150K daily users and Hype right now 50K. Maybe maybe we could pick your brain on how you think this turns out, because that is also kind of a battle or a war as you
Yeah.
outlined.
Yeah.
I'm
Same
keen to
thing.
see
Right?
like who is winning in your according to your equation.
Look, it's a great man. It's such a great point. Polymarket is obviously winning today, right? And so I will say this: like, there are major structural differences between Hyperliquid and Polymarket, and structural, yes, but also positioning differences. So it's almost like it's not a. I can't say it's not a fair matchup, but it's like a.
Yeah.
They're two different beasts entirely. Polymarket is winning from the end user relationship perspective. So no matter what they sell the user, essentially, they will do very, very well.
Yeah.
Right.
Fair.
That's why perps for them are very, very good. So it's from a direct flows perspective, not amazing for Hyperliquid because Polymarket is obviously capturing some of these flows, sure. But the other side of it too, to be very clear, is that Hyperliquid does benefit from the normalization of perpetual futures. So
Yeah.
that's the current conversation, right? Hyperliquid has explicitly stated it does not want to be the end user point. And like I said, most of the volumes for Hyperliquid are coming from API today, which means most of the users are technical or institutional by nature. Most of the volumes, to be clear.
Yeah.
This is just a fact. Then the next point is the Hyperliquid front end. And Hyperliquid does not want this. Like, Hyperliquid wants their front end to basically be, if anything, like the last point of usage. And they want other front ends to basically be the point of expansion
Yes.
for Hyperliquid
Yep.
as the AWS of liquidity. Polymarket wants to be the front end.
Yes.
Like, no matter what, Polymarket will probably sell you options one day and go into Robinhood territory, or interactive broker territory.
Yeah.
So I mean, like, it's calling it now. It's going to happen. Like, if they're going to do perpetual futures, they're going to do options, right? They may have never said it, but they will. They already do binary options on crypto.
Yeah.
Right?
Yeah, they do.
So
True.
So they will do options at some point, no questions asked. They're a big enough venue. They own enough users. They own enough distribution to make sense out of doing it, and they will do very well. Now, the downstream effects for Hyperliquid are the most important part. They normalize perpetuals, and it's another venue for perpetuals to be traded, which should deepen liquidity for Hyperliquid because as institutions get onboarded, my understanding is Polymarket is onboarding institutions or traders for their perpetuals product already.
Yeah.
Right. So if that's happening and Polymarket becomes a liquid or traded enough venue, you can put on a trade on Hyperliquid and go hedge on Polymarket and vice versa. So Yeah, I'm very excited about it, to be completely honest.
Mm-hmm.
Is it going to be a good product? I don't think so. Like, Polymarket's off-chain order book product has been notoriously very bad. But again, does it matter if they own the end user,
Yeah,
right? If your
true.
bottom line is
Yeah.
profit and revenue, doesn't matter how. And this is Polymarket's edge, right? They own the user
Yeah.
base.
Yeah. Yeah.
Nobody gives a fuck how good or bad the product is on the back end. It's working and it's making money.
Yeah.
That's it. So that's their prerogative. Whereas on Hyperliquid, in crypto, you fight this uphill battle of like, oh, the Arbitrum bridge has like money in it. Please like move. And this is an existential risk for Hyperliquid. And then, Hyperliquid's value tanks like 5 or 10% if it's a big enough deal the next day. Again, like in crypto, the same thing. Like Bitcoin went through the same fucking thing. It's not exclusive to Hyperliquid,
Mm-hmm.
right? Where it's fallen a huge percent because Google releases this paper saying, prospectively, in 2029, actually, instead of the 2030s, we think quantum will be an issue.
Mm-hmm.
So in crypto, again, completely or very illiquid compared to TradFi. Obviously, now with the convergence of these two worlds, we understand this better. But the point being that, going back to the Polymarket versus Hyperliquid or Kalshi versus Hyperliquid type thing, I see this as a good thing net, right?
Yeah.
The perpetuation of everything. They are playing on different sides of the field where Kalshi and Polymarket is more. It's more of a Kalshi and Polymarket problem. I actually would hope, like, the most bullish outcome for Hyperliquid is that Polymarket and Kalshi are like, fuck spending money on building liquidity. Let's just use builder codes. Like, that is the most bullish outcome for Hyperliquid by far. And they could very well do that. However, you have to understand Polymarket's size alone, the amount of capital that they've raised. It almost doesn't make sense, right? Especially when Hyperliquid is going into their territory with HIP4. It's almost like, why would we bring Hyperliquid all this revenue, which it will bring a lot of revenue to Hyperliquid, right? That's a guarantee.
Mm-hmm.
They'll double or triple their users in a quarter alone. I think alone for Hyperliquid.
Yeah.
So anyway, I mean, look, there's a lot to pick apart on it. We could literally spend another half an hour at minimum talking about the implications. But yeah, ultimately, I think it's a net good. I'm very excited for that because of, like I said, the perpification of everything. And like you said, the battle to war comparison is more so HIP4 to Polymarket's core product, right? Will Polymarket see more traction on perps than they do on predictions? That is in the air. That I have no clue of.
Agree.
But what I do know is if anybody's going to normalize it, it'll be Polymarket. And that's good for all of us, right? Because then when we go to market and go out and are explaining perpetual futures to users, they can understand it in a way that people understand options today. Like, you go to a grocery store and you ask somebody, do you know what an option is?
Mm-hmm.
They'll be like, oh, it's that thing like this Instagram guru, is trying to sell me on. But like, if you go to them and say like, what is a perp? They'll think you're like selling them a drug or something.
Yeah. Yeah.
So yeah. So yeah, I hope that gives some color as to my stance on it. It'll be a good fight for sure. But yeah, I don't think these guys will use builder codes. It'd be fucking awesome if they did.
Imagine. Yeah.
Did you see the AI XPT tweet last night?
I didn't see it. I saw like a portion of it from a group chat, but I think that thing hallucinates a lot. So
Yeah,
what did it
it's
say?
insane. It basically said that Kalshi will use builder's code.
I mean, look, the head of crypto, I think that's what he does there. This guy at Kalshi, has been very publicly bullish Hyperliquid. But again, I have to say I'll be very surprised if they use builder codes because, again, the sheer amount of capital these guys have raised, you have to imagine the institutions that are backing them are basically saying like, just go do this. Like why use Hyperliquid? Basically, like build it yourself.
Yeah.
They must think it's all so easy and yeah.
Kyle Samani also posted on Twitter that Kalshi won't be using builder's code. Nor
Luca, it's awesome hopium. I just don't think it's gonna happen personally. Yeah.
All right, nice. Yeah. So, one of Hyperliquid's standout features, and you have touched on it briefly, and everyone is talking about it, is like the revenue flywheel. Mm-hmm. You said 99% of the trading fees are used for buybacks and via the Assistant Fund, and I feel like the whole community is so aligned on the hype token. Mm-hmm. Even listening to you, like everyone is like like you're building Kinetiq, but still like Hyperliquid and Hype is such a big topic, and it feels like there's little room for anything else.
Yeah.
And if you look back at last year, over 10 million tokens were launched over like the whole crypto
Yep.
space, and yet last November you launched your own token,
Yep.
KNTQ.
Yeah. KNTQ. Yep. That's it.
Exactly. I mean, can you maybe
Yeah.
elaborate how you came to
Yeah.
this
Where does that
decision?
fit in?
Yeah.
Yeah. Where does that fit in amongst the ocean of Hyperliquid just dominating everything? Yeah. So I'm glad you asked. So I think it's very clear publicly the Hyper EVM protocols, no matter how they feel. I mean, in general, just it's not been an amazing environment at all for Hyper EVM tokens. More specifically, to be clear, it has revealed, if you kind of like strip back everything, right, and you're like, okay, why has this happened? If you're not building something novel on Hyperliquid, it's going to be very, very difficult for you to justify a valuation past whatever the next Discord trencher or farmer is going to value the token at. So yeah, with that said, the KNTQ is in this very unique spot where there is it. This is going to sound really funny, but this has never happened in other ecosystems, right? On Solana, it's like Solana's huge, and like these tokens should trade at like some. Again, I'm putting my trader hat on, former life, but Solana tokens should trade at like X% of Solana's FDV or circulating market cap. Ethereum tokens should trade at X% of Ethereum's FDV, and which is its circulating market cap. And if you do the numbers for KNTQ and Hype, it's like trading well under, and it makes sense. It's fair, fine. But there is a con. It's a pro and con of listing on a venue, because KNTQ today only trades on Hypercore, which is Hyperliquid's main trading venue. For those that don't know. So we're not listed on centralized exchanges. You know, we refused basically when we have Hyperliquid to basically get fleeced for like $500,000 or $1 million+ for a singular listing, and like fake KPI marketing budgets and whatever nonsense that centralized exchanges want to pull. And again, this is kind of part of the allure of Hyperliquid, by the way, for those that don't know. You know, you don't deal with that shit. Like, you just purchase a ticker for whatever it costs, which is minimum 500 Hype, and that's it. You can do whatever you want. Yeah, it's a good way of thinking about it. The first thing to point out there is Hyperliquid today is very early. So the way people look at it is that you're selling Hype at a discount today for what it should trade at in the future. So this is like the first thing. Again, I'm just putting my trader hat on, like I said. And like I said, I read a lot of these things, and I do understand the public sentiment completely, which is to purchase KNTQ with Hype today is like the justification for some people is that Hype should be trading at $80 or $100, so they feel like they're selling Hype lower than they should. It makes sense, right? Solana first had to run to like almost 200 or 300 billion in fully diluted valuation before its ecosystem, through memes obviously, which are way more liquid, could see this kind of crazy rise. Even as a comp, Jito traded as high as like 6 billion at one point. Lido, I think around the same, if not more, 8 or 9 billion. So again, as a direct KNTQ comp, right? So you have to ask yourself like why, and like again, I understand it from the trader POV, but anyway, going into this perspective on Hyperliquid, the KNTQ airdrop is interesting. We gave 25% to the community, and immediately kind of, again, Hyperliquid S. So there's a lot of float out there, and this is what we wanted. We wanted there to be more float than not. It made sense. The community should be rewarded for basically making Kinetiq what it is today. And instead of playing with people like most projects do, where they release a couple percent at a time or something, and aim for as little float as possible in order to inflate their short-term or mid-term value, we did the opposite, right? So this was kind of one of those approaches. And what we did was, okay, we're going to give people these tokens, and whatever they value it at, fine. We're just going to show that KNTQ can actually, and a token, a protocol governance token, can serve a very, very important part of a liquid staking product, and subsequently, for the first time ever, a HIP3 DEX. And this is exactly what we did. But before touching on that, you have to understand the nature of Hyperliquid traders is perpetuals trading. And what happens when markets are choppy and weird? People look for margin everywhere they possibly can. So when you launch a token on Hyperliquid, you become collateral damage, essentially is what happens. Because people are taking these tokens and they're like, oh, perfect. Like now I have extra perp collateral. And if I'm super bullish on this and I like hit a good trade, I'll buy more or whatever, right? So many different trees of thought occur from that alone. Whereas like on Solana, it's like, what are you going to use? I'm not grave dancing here, but like, were you going to use drift back then? Like, not really. That wasn't really the cohort of people trading there. On Ethereum, like, what are you going to use? Are you going to like bridge to Arbitrum and use GMX? Like, so this is, it was more difficult for those people because the proximity of a perpetuals exchange was so far, right? On Solana and Ethereum. Whereas here, like we literally gave it to them on the DEX. All you had to do was click sell and you had margin to trade Bitcoin or Hype with, so as you can see, this is why KNTQ led to another 30 or 40 million USDH being minted, because this is what people kind of liquidated their KNTQ for, which again was good for USDH growth and kind of subsequently or indirectly buys Hype with. But yeah, so that's the thinking. But going forward, right? Again, just to give people the logic and reasoning as to why it may feel like there's no room for anything else in an ecosystem like Hyperliquid where the token is so quote unquote perfect. Going forward, what we realized was, okay, there's an opportunity here to do liquid staking protocols I've never done before. So we recently launched what we call KIP2. This was a couple weeks ago, where the staking model changed entirely. So we used to take a 10 basis point fee on withdrawals. And this was great for bootstrapping because that meant everyone kept all their yield. But when you withdrew, there was a 10 basis point haircut. Like I said, great for bootstrapping. Kinetiq at some point had around 45 million Hype. Today it sits at about 20 million in Hype, post token, post incentives, etc. So great by all standards. Our users are, if anything, growing still, which just doesn't happen in other situations. But yeah, going forward, what we realized was, okay, there's a great opportunity to take the staking revenue, which, like I said, the business model changed from 10 basis points on withdrawal to 10% of the staking rewards. So now there is no withdrawal fee. This improved secondary market liquidity for K-Hype to Hype swaps because now there's no withdrawal fee, right? So people don't need to price that in when they're providing liquidity for K-Hype and Hype on secondary markets. And we take 70% of the revenue now from staking yield and we put that programmatically into KNTQ. So that comes out to a couple $1 million a year in pressure to KNTQ. And we do this on the open market, on Hypercore programmatically, like I said. And then recently before that, we launched SKNTQ. So SKNTQ is staked KNTQ. And our current methodology for what SKNTQ represents is total alignment with the Kinetiq protocol. And what that means is you're staking your KNTQ, and in return, Kinetiq is not emitting like liquid KNTQ tokens for this because, again, I find that completely retarded. Our team finds that completely retarded. So we're not going to do that. So what we will do, and like what has been happening already, is revenue is taken from these various sources that Kinetiq and markets generate and is plowed into SKNTQ yield in the form of purchased KNTQ in the open market. So effectively, for people who do not stake, they are diluted. And people who do stake are incentivized to stake because you are literally owning a greater piece of the network the longer you stay staked. So where's the revenue coming from? It's coming from the staking yield, which comes out to a couple $1 million a year. And like I said, it's 70% of the staking yield, which scales with the growth of Hype and the growth of our TVL. It's also coming from the launch product. When it goes live, 100% of the launch revenue will go into purchasing KNTQ and giving that to SKNTQ holders. It's coming from the validator commissions. That this is the first time this has ever happened too, where we get the validators for Kinetiq who have opted into the set by agreeing to give 50% of the commission from Kinetiq stake to purchasing KNTQ in the open market. So they send that to the KNTQ deployer, so they don't handle it themselves. The KNTQ deployer programmatically will take their kind of like monthly invoicing, if you will, for this yield and purchase KNTQ in the open market and drive that as KNTQ. So like I said, I can go on for a while about this, but markets revenue also contributes to KNTQ. There are some sinks around it as well. So KM Hype, which is the LST that allows people to basically co-own the markets exchange. Right now, there's close to 1,400 co-owners, if you will, that have staked Hype for the exchange. You need SKNTQ balance that gives you an allocation to stake and co-own the exchange. you can also do the same for a higher share of referral revenue. So, SKNTQ and just the token itself is integrated into every point of the product suite on purpose in an intuitive way, not to give people friction, but to just accrue value from whatever the protocol is generating effectively. So I hope that all makes sense. But so what we all can do effectively, if you're looking at this from like a broader Hyper VM builder perspective, is you can do as much as you can with integrating your token into your product. And it's kind of, again, the Hyperliquid philosophy in the sense that if it's good enough, people will get behind it and use it. And this is what we found has been the case at Kinetiq. Again, just being objective here, outside of hype, the sentiment and consensus is that the only beta to hype is KNTQ. And this is done on purpose. This is because, we've taken our dominance in the ecosystem and attached it to KNTQ, which is the sole value accruing vehicle. So anyway, I hope this makes sense. And I know there was a bit of color and context as to how we got here, but that is why KNTQ does kind of serve to be like the sole beta to hype ultimately. And like I said, by design. So hype is this perfect asset from the crypto context. And we believe that KNTQ will be its cousin.
Nice.
Yeah.
If you will.
It's cousin
That
or
totally makes
the
sense.
little brother. Very interesting.
Little brother. Something, yeah.
Or sister. Hey, thanks for sharing. Maybe before we let you off the hook to slam the leverage sliders, one last question. Where do you see, maybe looking a couple of years, looking in your crystal ball, where do you feel like are the biggest risks, or where might Hyperliquid be in, let's say 5 years down the line, according to your mental models?
Risks to Hyperliquid.
Mm-hmm.
So, all right, before I answer this, because this is a very deep question, as in what could inhibit Hyperliquid's growth over the next couple of years or 5 years, you said? Right? Okay. So a few things. Could there be hacks? Sure. There's been attacks on Hyperliquid. HLP is, I find, to be quite unnecessary today. It doesn't provide anywhere near as much impact as it did in its earliest days. Even as of recent, probably within the last year, HLP has not really been impactful at all to Hyperliquid's liquidity profile. It doesn't do much volume. And it's this big, huge pot of money that people are very incentivized to attack. So this is why every so often you see HLP get caught in a bad trade. So that's one thing. I don't think it's existential by any means. They make constant improvements, but that's one thing. Another thing is, Hyperliquid today is the on-chain incumbent, right? There are potentially design choices that people could make that would ultimately make a more performant version of Hyperliquid. Do you need a more performant version of Hyperliquid? I don't necessarily think so. Hyperliquid today can handle in production a maximum of 200,000 transactions per second. I think there hasn't been any more than 16,000 at peak per second. So performance-wise, I don't really think so. But there is trade-offs that people make today depositing to Hyperliquid, which is there is some trust concerns, which there is like the Arbitrum bridge, like if you're using USDC. They've solved this technically in a way where it's not like a forced conversion, but whenever you deposit onto Hyperliquid now, it is effectively using native Circle CCTP, to my understanding. And when you withdraw, it's taking funds out of the Arbitrum bridge. So this is how they naturally run that to zero over time. I think a quarter of the USDC has moved off of the Arbitrum bridge, but there's still obviously 75% of the original amount to go. So hopefully that gets off. Because again, that is also a huge honeypot effectively for a DPRK type state actor to attack. The other side of it is there are regulatory concerns, obviously, right? Now there's the Hyperliquid Policy Center, which is great. But the point is Hyperliquid is a no KYC DEX, right? And that is problematic for, I'm sure, the US government in many, many ways, which is understandable completely. And at the end of the day, like there is compliance concerns, especially for institutions. Like Hyperliquid does get a lot of this coverage right now, but you would be very naive to think that because it gets a lot of coverage, people are trading, like institutions specifically are trading on it, or like a ton of like American users. That's just not true. right? Like Hyperliquid is a great spectacle now in TradFi, which is fantastic. And they may use it in some way, shape, or form. Like I heard in a group chat, people saying that Hyperliquid is used to watch the oil prices, but no, they're not trading it like on Hyperliquid. They may be trading it elsewhere. So this is good. Yes, Hyperliquid is accomplishing its mission in this regard by giving people like a point of reference on times that the market is not closed historically or not open historically. But yeah, so I hope that gives some color.
Sure.
There is another component as well, which is the public nature of Hyperliquid. I believe that this is a risk. I don't think it's existential, but all institutions and large traders on Hyperliquid today make a trade-off in trading their privacy for liquidity and effectively like just robust trading environment where retail doesn't give a shit, but institutions do very much give a shit and large traders do very much give a shit. So the public nature of Hyperliquid, which they'll never change their tune on, understandably, does present some risk to its longevity over the years. Again, I don't find it existential, but it is a risk nonetheless. So yeah, those are my takes. I mean, there's quite a few there, but yeah, I mean, if it works, right? It's like Jeff says, right? Like if it works, like this, Hyperliquid should be valued at trillions.
Yep.
No joke. But yeah, there are definitely risks to take into account, no doubt.
So thank you for spending the time with us. It was a pleasure, and see you next time on Uncut Gems.
Yeah, we should definitely do another one. Thanks for the time, guys. Really great hosts and fantastic chat with you both.